Hey guys, so today I wanted to have a look at bond yields. Again, first of all, we got a lot of questions from people on that over the past couple of weeks. We do have a service that exclusively focuses on this specific trade that I'm about to show you that we manage through the lens of a service for people actively and on a monthly basis, we update them on this trade and all that kind of stuff. But I want to give you some perspective on this because interest rates are so important. So this what you're looking at right now is a chart of U.S. 10-year bond yields. This stretches back to the 80s, actually the earlier mid 80s at least, and you can kind of see what the trend has been. You can see the trend is essentially from the upper left to the lower right, and I think that trend will continue. Now, if you take into consideration some of the demographical issues we have, growth issues, national debt, really globally, not to mention rhetoric recently even from the U.S. president that we think we could have rates going lower again. People like Alan Greenspan, you may recall who that is, thinking that we're going to have much lower rates in the U.S. as well, kind of following what's happening in Europe. So there's a lot of reasons to think yields will go lower. I'm not calling for negative yields here, but again, that's that's kind of besides the point. But kind of just thinking that we're very limited in terms of how much yields can go lower, and this has huge implications on the stock market as well. So if you don't focus on bonds and bond yields, and you don't think it matters a heck of a lot for stocks. But let me just kind of walk you guys through this and kind of try to make the case. At least from a technical perspective, to keep it simple here, why or how we could see yields move lower. Again, if you're interested in much more of this, where we update you guys on a monthly basis, twice a month actually on this particular trade, we have a very specific trade on that'll make a lot of money if and when yields go lower. Leave us a note down below, and we will be able to get you in that for actually a probably the price of a lifetime. Let me put it that way. Anyway, let's talk about this a little bit. And you can kind of see what this looks like. So bond yields, again, basically trending lower since the 80s. We think that trend will continue. Whether that's negative or not, it's kind of besides the point. I don't necessarily think we have negative rates, but again, that's kind of besides the point. Now, let's have a look at this a bit more closely. And we're looking at 10-year bond yields. Now, we're going deeper or closer into this chart, the same chart that I showed you. We're zooming in closer. And essentially what we've had, and I'm going to get rid of some of this momentum stuff down there, but again, from a very simple technical perspective, you can see we've kind of bounced off of this area. This is about 1.4, 1.5 in terms of yield in the 10-year U.S. Treasury, and we've kind of rebounded here over the past few months, largely because of what the Fed has done in terms of balance sheet, getting people into riskier assets. To some extent, there's been a little bit of reprieve of growth, slowing, so a little bit less slowdown, but the broad sort of theme continues, and we do think that yields will go lower. Now, if you zoom in a bit closer into this, and again, this is now the technical side of it, you can see that yields in 2018 in October, November went from above 3, called 3.2%, down to 1.4% in August of this past year. I remember telling people in October 2018 that I think yields are going back down to 2%, and boy, did we get some nasty emails from people. We ended up being correct in this case, which is nice. But I think now, after a bit of a bounce here, and technically speaking, you can see we have this, I'm going to call this a bear flag, and you can see that we are starting to break out and below this bear flag. Now, this is a multi-month, multi-quarter, probably a multi-year kind of trend and trade. So you have to be careful not to time this too much. But I do think we're now getting closer and closer to potentially see yields go lower. Now, not to make this too confusing, but basically bonds have an inverse relationship to bond yield. So if bond prices, our bet is that bond yields go lower, which is the chart you're looking at, which is to say that we think bond prices will go higher. Now, to give you a better idea of this, and not to go into too much detail, but you could look at something like an ETF that represents shorter-term bond price, right? So again, remember, we're expecting bond price to go higher. There's an ETF out there called SHY, which represents more of the shorter end of the yield curve. And I'm very much thinking that this will break to the upside. And again, this is congruent or is the same as saying that bond yields will go lower. We're thinking that bond prices will go higher. So anyway, I just thought I'd give you an update on this. I do think we're getting closer and closer for bond prices are started going higher again, i.e. bond yield lower. If you have any questions, comments, concerns, thumbs up, whatever's you have, share what we're doing here. Leave us down, a comment down below. And if you do want to join what's called the Decade Trend Trade Report, if you want to join us and do this trade along with us on a monthly basis where we update you and keep you in the loop on this, let us know. But again, interest rates and bonds are very, very important as it relates to the stock market. So just at the very least, keep that in mind. With that, I will see you again soon.